Yeah, happy to have you on again. Always enjoy talking to you, and the audience loves hearing your thoughts. So let's start with the great performance put in by gold and silver so far this year. In your view, what are the main catalysts that brought us here? And is this a precious metals bull market that is still in its early stages?
Well, absolutely. I think we're just getting started. I think there's still a lot of fear and doubt in the market. Just look at the underperformance of the gold and silver mining equities. Traders are very skeptical of this rally. They didn't expect it. In fact, just a couple of months ago, Newmont Mining and Barrick Gold were basically downgraded to sells, the equivalent, holes by Wall Street because they saw no upside in the price of gold. And that's when gold was around 2000. We're now around 2400, 20% increase. That's pretty good upside. And, it's still early in the year. And, it's just that the traders still don't understand it. They think, well, the Fed is going to cut rates fewer times than we thought, or is going to delay the rate cuts. And they think that's bearish for gold. But it's really not bearish because it doesn't even matter if the Fed cuts rates at all. The Fed should be hiking rates, and they're not. And that's what's bullish for gold because inflation is already headed back up. It never got down to 2%. Now it's headed back higher. I think we're going to take out the 9.1% peak from mid 2022. I mean, all the forward looking indicators, commodity prices, not just gold and silver, but all commodities are showing incredible strength, much more so than we saw in the previous year. And credit growth has continued unabated despite the Fed's rate hikes. Government is borrowing more. Private sector is borrowing more. Everybody is spending. Deficits are out of control. There's no sign of any fiscal restraint. It's the deficit spending that is the driving force behind the inflation. And the Fed monetization and the artificially low interest rates. And even though the Fed has hiked rates many times and we're back above 5%, that's still a low rate. It's still a stimulative rate. It's not a restrictive rate the way Powell and his cronies at the Fed claim. The Fed is still providing easy money to the economy. And of course, we have highly stimulative fiscal policy. So it's an inflationary cocktail, and gold understands this, or gold investors. And the big investors are the central banks, foreign central banks, particularly emerging market central banks, are major buyers of gold. That's going to continue. Investors haven't even really participated yet, but they will, probably at much higher prices.
You mentioned on your show recently as well that the mainstream media seems to be kind of asleep at the wheel when it comes to gold and silver rising as well. Why do you think it is that it's so dismissed? I mean, there were even some insane articles on CNBC saying you don't want to own gold because the only reason to own gold is if the world is in chaos, and people that own gold hope it doesn't go up, and all of these insane things. Um, what is going on with the financial talking heads? Will there come a point where they wake up and they start talking about gold like it should be talked about, and that is as money?
Well, first of all, I think the strength in gold really flies in the face of the narrative of a soft landing, of a return to 2% inflation, of rate cuts coming. And so they don't really want to acknowledge that or question these beliefs, or, acknowledge the warning that gold is sounding on inflation, on fiscal policy, on monetary policy. But also, I think a lot of the financial media has been captured by the cryptos and the Bitcoin people who are spending a lot of money advertising on all the financial networks and who flood the financial networks with their guests. And so I think they've really pushed gold to the back burner because, as far as they're concerned, gold's irrelevant because now we have something better. We have Bitcoin, which they claim is digital gold. But it's not digital gold at all. I mean, it's no more digital gold than digital food is food. Gold has real properties in the real world that are vitally important to its value. You can't just replicate that, digitally because you can't substitute Bitcoin for gold in any capacity in which gold is used. So it's not an alternative. So what is it? It's a token but there's nothing unique about it. There's 20,000 other digital tokens that have been created. Sure, they have a different name, although some of the names are very similar to Bitcoin. The properties are very similar. I mean, there's tweaks here and there, but some are pretty much carbon copies of Bitcoin. Many have improved on some of the flaws of Bitcoin. But regardless, there's enough of them for everybody to buy them. I mean, they can keep creating new ones out of thin air, and so there's no reason for Bitcoin to be worth 60 plus $1,000 or anywhere close to that, or even 10,000 or 5,000 or 1,000. I think it's all just a digital Ponzi, a pyramid. I mean, it's it's a blockchain letter is what it is. It's just a chain letter on a blockchain, and that's all that's new is that a classic fraud is being perpetrated using the internet and blockchain. So all they've done is dressed it up for the 21st century and repackaged it and presented it as if it was, something new and legitimate, but it's just the latest iteration of fool's gold to the money.
I want to get your thoughts on silver here because central banks are not stacking silver, but it has been performing quite strong, seeming to move in tandem with gold recently. What are the catalysts you see driving silver? I've heard some interesting comments like the Indian retail market is a big reason for silver's move. I'm wondering what you're seeing in the silver market right now.
Yeah, I mean, silver was really bound to take off. It was near what 90 to 1 with gold, record lows. Gold was marching higher, really from 2000 to 2200, 2300-ish. And silver hadn't even moved. Silver was still below 25. And then all of a sudden it spiked up to 30, pulled back a bit. But I think now silver is broken out and it's joined gold and will ultimately eclipse gold as far as the percentage gains, not the price, but I think, percentage wise, I think that silver could hit $50 an ounce before gold hits 3,000. And so that's a much bigger gain for the price of silver than the price of gold. But again, I think the reason was the central banks. They weren't buying silver. They were just buying gold. They don't have room to store silver. And also the central banks aren't investing in the mining stocks. So, it's the retail public and institutions that might have been investing, and they were not. Again, they don't understand it. They think that gold or silver should be going down because it's a soft landing. Everything is great. Buy the Magnificent Seven. And those who are worried, well, they were buying Bitcoin. I think that the launch of these Bitcoin ETFs really, provided that smokescreen because when everybody should have been talking about gold's rally, they were talking about these Bitcoin ETFs, which were the most successful ETFs as far as how much money went into them. They're not going to be successful from the point of view of the people who were dumb enough to buy them. It's going to be a complete failure. But Wall Street did, sucker in a lot of speculators, so they're making money for now in these ETFs. But I was actually watching during that first month or so of trading, like there was 1 week where gold went sideways and gold stocks were down like 15%. And it was like, well, what's going on? And I thought, well, maybe people are selling off their gold stocks to buy the Bitcoin ETFs because the money had to come from somewhere. And in fact, all year, we've had record outflows out of GLD, which is the biggest gold ETF. At the same time, where gold prices are running up to record highs. And normally it's the opposite. Normally, the retailers are chasing a rally. They're not selling into the rally. And so what that tells me is that they've got it wrong. This rally has legs. It has a long way to go. It's not going to be until we have huge inflows from the retail public that we're probably going to get a significant correction. Probably not even a bear market at this stage, but we could have a 5 or 10% correction if the public jumps in. But so far, they're still selling.